Fortescue's Chief Financial Officer, Stephen Pearce. He joins us on the line from Perth. Welcome to you, Mr. Pearce. Thanks very much for being with us. So this result came in below analysts' expectations by a fair bit here. How come?
Oh, listen, Lindsay, thank you for speaking to me today. We're very pleased with the result. It's been a terrific three-year journey for the company since we first commenced production, with operating revenues of $5.4 billion, an underlying EBITDA of $2.8 billion, up 119% year on year. We're very pleased with where we sit at the moment.
Right. Now, I'm reading that the cost of your sales rose 30% to $5.4 billion during the period for which you're reporting for. So tell me what that means. Does that mean that it's been costing more to get it out of the ground, more to ship it because of energy prices? Is that really eaten into your profit here?
There's been a number of factors that have influenced the costs, and one of the most significant ones is, in fact, the Australian-US dollar exchange rate. And while that hurts us a little bit on costs, which are running for the year at around $44 per tonne, there's a high correlation between the currency and the iron ore price. And we've been enjoying iron ore prices well above $150 a tonne. They currently sit in the high $170 a tonne. So I'd trade the increase in costs every day for the increase in revenues.
Right. So you're planning a huge expansion of your iron ore operations. Tell me, as you watch this global market sell-off, as investors bet on a double-dip recession in the U.S. and Europe, how's this going to affect your profitability? How's that going to hold up if we do indeed go into a recession?
Yeah, most of our sales go into China, and we unashamedly offer investors Australian sovereign risk, but with exposure to China and the iron ore and steel construction industry. China's successfully developed its steel industry over the years to be a significant export industry, but in more recent years they've turned a lot of that production to internal development within the country.
Right.
They recently released... Sorry, go ahead.
I was just going to say, Stephen, a recession in the U.S. and Europe would most definitely affect China. We are also seeing a slowing of the growth rate there, a stabilization of the growth rate. Have you noticed any kind of indication here of lower orders from China going forward over the next 3 to 6 months?
No, we haven't really seen any lower orders. At the moment, we still can't ship it fast enough to meet demand. But, it would be wrong to suggest the steel mills are conscious of their cost structures. They are seeing some internal inflation within China, and the government is taking measures to get that under control. But again, on their growth rate, you need to keep it in perspective. They're moving down maybe from in the teens to down to 7, 8, 9%. It's still a very healthy growth rate that most countries would be very pleased to have.
Yeah, and you're very pleased to have them clearly as your biggest customer. Thanks very much.
We are indeed.
Stephen Pearce.
An absolute pleasure. Thanks very much.
Thanks very much.